again today. It's the 7th of October, Friday, and we're about 10 minutes away from D-Day, or the not D-Day, but the data. Remember the Fed at the moment. Yesterday I was looking at the Fed funds rate, and we're looking at an 85% chance now of still a 75 basis point hike at their 2nd of November meeting, which is only now a couple of weeks away. The Fed the Fed and their speakers continue to push the narrative that obviously 2% is their inflation target. We're still way above that, 8.3% at the moment. Remember, we got the key CPI, well, not a key, but another piece of data on next week. CPI data on the 13th, so that'll be key. Remember the PCE that came out on Friday, which is showing some heat as well. So it's really all in the mix now. Obviously, many market participants. I was listening to a well-respected economics professor from Chicago last week, ranting very aggressively about they've gone. They're pushing the U.S. economy into recession. They've gone too far, too aggressively, and they're going to have to stand back. But all this week, really, we've had this big rally in the stock markets. Let me just show you that. I'm sure you're all aware of this. If we look at the rally in the stock markets here this week, I'll zoom that up a wee bit. Sorry if I just get rid of me a wee bit. There we are. This rally in the stock market is a huge rally on Monday, Tuesday, after we'd been down under 3,600 on the S&P. Good afternoon, everyone. We'll get to your obviously what we're looking at. Gold, somebody saying euro, Kiwi, and sterling. Jar, hello, my friend. Hope you're all well. You're all my YouTube friends here, so let's hope we've got some other people from Facebook and our other social media channels. What was I saying? Yeah, basically the Fed, this non-farm payroll is key, as they all are, but this one's particularly key. They're still talking about non-pivoting. The market seems obsessed. If you're watching, the analysts on Bloomberg and CNBC and the other business channels, the idea of a pivot, that they've gone too far too quickly and they're going to have to turn around quite quickly, is still exercising many. But as far as the bat, as we say in cricket in England and elsewhere that plays cricket, with regard to them actually turning down this rate hike cycle, it's still very much on play. And as I say, 85% chance at the moment. It's still obviously a few weeks away. It's plenty to happen between now and then. Of a 75 basis point hike again in November. Some are saying they've gone too far too quickly, but the top of the cycle, they're 4.25, 4.5%. But we'll see. See how tight this jobs market has gone. Remember the JOLTS number earlier in the week showed a big 10% fall in opening. So that's sort of the thing the Fed will want to look at. 250,000 is the headline number today. Remember the participation rate has been key over the last couple of months. We had this big Goldilocks sort of response last month to the data, not the response, but the data was very much a Goldilocks, just about right. The strong headline number last month, 315,000. So see if that's been pared down at all or pared back up again. Weekly hours worked was 34.5. Earnings tipped a bit at 5.1%. That's expected to remain fairly tight on an annualized basis, 0.3 of 1% for a monthly basis. And the key number, say, participation rate tipped a wee bit to 62.2% from 62.4 last month. And the unemployment rate expected to remain stable at 3.7%. And the wider U6 level, which I always look at, that's come down quite aggressively. It was in double digits not so long ago. We're now under 7% at 6.8%. So see what that looks like in about 5 or 6 minutes when the data comes out. So good afternoon, everyone. We'll have a look at all your comments. I'll start with you, Forex trader, my friend. We'll have a quick look at this before the data comes out. But sterling has been very much under the cosh, not helped by the very, very fractious Tory party conference, where it's open hostility to the Prime Minister and members of the cabinet disagreeing with not increasing in line with inflation benefits for the poorest in society. So sterling very, very much under the cosh. We're currently trading back at 112 today. If we look at the 1 hour, if we zoom this in to the 1 hour time frame for cable, see it's been a very week for cable, so it's still looping down. We're currently, I say, around about that 112 level. We've been as low as 111 here yesterday, or this morning, in fact, and yesterday we went down to 111.14 area for cable. So it remains weak. It's ticked up to 112 here in this so far today, but it's really got a bit of resistance there. Next resistance to the upside on this intraday basis, obviously a lot of it's dependent on what this non-farm payroll looks at, but the 50-hour moving average there at 112.47 forex trader, my friend. So it's ticking up a wee bit, but we've still got a strong dollar, but again, some quite significant support there at 111, just under 111.45 is the support really today on an end of hour basis. There you are, 111.40 has been the end of hour support there. Yeah, good afternoon. Bonjour, Mohammed. We'll have these sessions in French. Mohammed, as before you know it, stand by, watch your. Just keep watching our marketing pages. Amir, sell dollar, sell gold. Well, we'll see. Gold. Let's have a look at gold at the moment. Gold's been down today. It's been down sort of all week. We've rallied and tested this 1725 level this week a few times. This is the 1 hour again. So here again this week into 1725 here again on Wednesday. Yesterday we were into it. We were back down to 1710, and that's really that range we're sort of in. The big round 1700 sits here. This big blue line here, and we're significantly above that, you would argue. So 1710 is the support. 1725 remains the key resistance level. Couldn't get over it yesterday. Couldn't get over it on Wednesday, and we banged into it a few times here on Tuesday. So 1725, the big resistance. 1710 is where we pivot through at the moment. And we'll see how the data comes out in the next minute or so. So I'm just going to I'll leave you there. Yeah, we'll just leave you here, and we'll come to the euro as well. Let's put the euro on as the data comes across the screen. So parity is all the way up here, guys. Parity is all the way up here at obviously 100, and we ran into it here on Tuesday. Quite an aggressive rally on Tuesday as we went through .99. But then Wednesday we came back through .99. We looped through it yesterday, couldn't hold it. Thursday we collapsed down, and Friday we've been right down now into this key 200-hour moving average, which is our sort of rising support here now. So resistance sits at 98, and we're going down. Looks like the data might have come across. Looks like it's strong for the dollar. Look at how the euro is reacting there. Let's put this on the 5 minutes. So it's a big, strong non-farm payroll by the looks of things. So headline is coming better than expected, 263. Earnings has come down, which is positive. Participation rate has gone up to 62.30. And the wider U6 unemployment level I was talking about has come down again, so it's 6.7. So that is, it's dollar positive simply because it's not going to knock the Fed off its headline move of this 75 basis points by the look of things. So jobs remain robust. Previous month hasn't been revised at all. It's been confirmed at 315,000. Headline was expected at 250,000. It's only a wee bit better than expected, but it's better than expected, not worse than expected. So it's coming in at 263,000. Earnings have slipped a tad, so that's positive as well. Participation rate has gone up, which is also positive, and unemployment rate has gone down to 3.5%, the headline, and the U6, the wider measure, has also gone down to 6.7. So that's more demonstration of a tight jobs market. That's going to keep the Fed and the hawks on the Fed, which is basically all of them at the moment, save Jay Powell. He doesn't actually say very much, really, but it's very much a dollar positive non-farm payroll data. So dollar expected to rally. This is the euro on the 5-minute. We crashed as low as the instant reaction took us down to what's that? No, .9752. So 97.50 has been tested immediately on the aftermath of the payrolls number. Sterling likely to have gone down as well, perhaps not as much as the euro reacted, although it's down. And again, that's tested below where we were earlier today. So we've gone to 111.30. So 263,000 for the headline payrolls. I say again, it's another Goldilocks number, really. It's across the board. That's strong. It shows significant resilience in the jobs market. So it's going to keep the Fed on this tightening track. Earnings slips a tad, 5% from 5.2%. But the unemployment rate down significantly and participation rate up significantly. Excuse me. The other key data today. Let's have. I've got Dollar-CAD. Yes, we use Dollar-CAD. The other key data today has been the Canadian data, which is better than it was last month. Unemployment's down to 5.2% from 5.4%. Net change is coming at 21,100 new jobs in Canada compared to a miss or a reduction of 39,700 last month. So it's a little bit better than expected. It was expected at 20,000 flat. It's coming at 21,100. And the participation rate has slipped a tad, but only one tick to 64.7% in Canada. So overall, again, good Canadian numbers this time, but the US number is outperforming. And here we've got Dollar-CAD rallying once again, and we got as high on an immediate reaction to the payrolls numbers to 137.90. 137.60. 137.60 has been our high here on this 5-minute chart, which is where we were this morning, and that looks like that's going to well, you can never tell with NFP, can you? It's continues going up, but there we are. 137.60 is our high for Dollar-CAD. Let's get us back to what you guys want to look at. Let's have a look at the euro. Euro sort of cooling that initial reaction, but it remains, very much to the downside. There's .99. There's parity 100, and if I may, I can put in 98 now, can't I? Where's my 98? So 98's around about there. 98.04. Let's just tidy that up. 98. So there's 98, where we're .98 and under that, and we've been to 97.52. So let's have a look what you guys want to have a look at. Akimu wants to have a look at the Kiwi. Kiwi, remember, the RBNZ earlier in the week confirmed the 50 basis point hike, so they went with expectations. Remember, on Tuesday, the RBNZ had only gone with 25 basis points, cooling the rate hike cycle and denting the Aussie somewhat. Kiwi went with expectations, and they were quite hawkish in their talks. Well, Mr. Orr talked about more to come. And the New Zealand economy is open to visitors. It's open to developing and moving forward in the in the final quarter. But again, here this is 15-minute for Kiwi. Kiwi had a dip, like most dollar pairs. We went down to 56.13. So it's a huge, big move down, and that remains pressured to the downside. Akimu, I don't know how you trade this, but here you can see today it's obviously been very, very sideways, but the trend remains very much to the downside. I'm zooming that up as the dollars come back to life here as we start October. So this is the 1 hourly chart. Big move here on earlier in the week. Took us to 58 over .58, but we're down again now, and that's really sideways action here. We need to, here on this hour, we'd look to break this low. That's where you want to be looking. So that's looking negative. It's in the under half of the Bollinger Band. And here you can see the Bollinger Band's widening. That's looking like that's looking to push lower indeed. If this hour, which is obviously still got 25 minutes to go, closes below where we are, literally where we are now, it's 56.30. We go down. You see the spread there. I've got both the bid and the ask line on that Aussie Kiwi chart there for us. So I don't know what time frame you're trading at, my friend, but been sideways today. Buys to the downside. This is the 9 period. The green line is the 5 period. It's our crossing EMA strategy. rallied into the 20, looked like it was going to go long, didn't, and that's triggered short here just in this last hour or so, and a break below this current level where we are now will take this lower technically, and there's our fractal low, our new fractal low here from these ones earlier into close yesterday and this morning. So that's pressure down. Good non-farm payroll as far as the dollar's concerned. Those dollar bulls. Have a look at what the futures is doing. Let me just go through all your requests and I'll come back to one. Amir saying sell the dollar. Well, the dollar, my friend, has actually moved up. I don't know where my dollar index has gone. So look. Dollar index here. So this is the dollar index. Remember, it's 6 of the key currencies. 50% of it is made up of the euro dollar. Includes obviously the Swissy, the CAD, sterling, Swiss crown. But dollar up here, 112.42. Big rally we've had here. Let me go to the daily. So we shook out into the end of September. We went down to 110 on Monday as stocks rallied, but we've been back on Wednesday, Thursday, and up again today into 112. And we're over 112, trading at 112.44. That's still looking relatively positive. Stocks, stochastics moving up quite aggressively there. Signal line flattening out, but that's a bid on the non-farm payroll, Amir. So that's not looking good for a short, my friend. Unless, it depends what time frame you're looking at. Eugene, what's the direction of the market? It depends on what market you're talking about, Eugene, but this is a dollar positive non-farm payroll that will bring pressure to the rally we've had in the oil price, although you can't really tell that on there. That's still bid. Oils ran to test 90 today, interestingly. This is the US oil on the 1 hour time frame. Interestingly, we've been over 89 again, so $90 next line in the sand for oil. As I was saying, the futures market, this US futures market, Nasdaq, I know is a big favorite with many of you, will have looked to weaken on the stronger dollar. There we go. This is the Nasdaq futures before the market opens in an hour or so. So we're down right into that. See the red line on there? That's the 200-hour moving average for the Nasdaq, which sits just north of 11,400, and that's where we're literally trading now. I hope you can see that. That's where we are now, 11,400. We've been in the under half the Bollinger Band here on this 1 hour chart. Half into it yesterday, couldn't break out of it. That was our resistance, the 20 hour. Nice rolling top there, and then we moved down into close. Retraced this morning, but couldn't break there, and they were still short, and that's back outside of the Bollinger Band now. So the Bollinger Band's likely to expand. We've had this squeeze in here. Squeeze is always good. In fact, zoom that up, always good for volatility. So this looks like pressure to the downside at the moment, but this 200-hour is likely to hold as a key level. If we break here, you can see there's a lot of fresh air from the rally we had on Monday and Tuesday below that. So we went up very, very quickly at the beginning of the month, beginning of the quarter. No surprise there particularly. We'll see where we finish the week. Stocks remain very much to the downside. As you can see here on the, I've zoomed this up now a bit. You can see the nice, the signal line here on the MACD slowing, from yesterday, day before, zoom, and it's down. We're negative. Stochastics couldn't get up and turn down. RSI at 29, so it's moving into an overbought area. Might bounce off this key 200, but if this gives way, that's Nasdaq moving lower. Eugene, that's what you mean by the market. It's dollar positive. It's stock week. This non-farm payroll, let's say, headline came in beating expectations at 263,000. If you're just joining me, from an expectation of 250,000. There's big variance as well in the analysts' calls this month. 375 was the top and 175 was the bottom. So we're at the top end of above the median. Participation rate 62.3%. Better than expected, but not as good as last month. Unemployment 3.5%. So very, very, very tight jobs market. And that's adding to the earnings pressure. Earnings back at 5% have cooled a wee bit. So again, it's a nice combination of numbers here. It's not going to push the Fed off its rate hike cycle. It looks like 75 basis points unless there's some significant change in the inflation data between now and the 2nd of November, when the bank next makes its announcement. So there we go. Royal Leaf, euros a sell, I think. Well, certainly it moved down instantly. It's been weak here on this, this Bollinger Band strategy here since the break into the under half of the Bollinger Band here midday yesterday. It's rolled down, spiked out of the Bollinger Bands, didn't get back to the midline, flattened here at 98, having breached 99 yesterday. Remember, we had a big rally up through 99, through back to parity very, very aggressively on Tuesday, sold off on Wednesday, retraced a bit on Thursday, another big sell-off on Thursday as we went back through 99 and 98, and here we are at 97.50 being tested as we speak. So euro is to the downside. Royal Leaf, you're right, my friend. Thea, is gold going to drop? Well, let's have a look. Gold should be pressured from a stronger dollar. I would guess it's broken through that 1710 level we were talking about earlier today. There's our channel. We sort of broken under that big flat channel lines here for the moving averages. But yeah, it's a stronger dollar moving us down. So sustained move under 1710 will take us to test 1700, but it doesn't seem to want to do that this week. Look at where we are. Look at these channels here. So we rallied up here earlier in the week. We ran to a big significant resistance at 1725 on Tuesday, Wednesday, and again yesterday. But we haven't been able to break below the 1710 pivot area here. We were sort of just above it here. And then we've gone down. So 1705 is where we're at the moment. So that's eking to the downside for gold on the stronger dollar. How long that's going to last into the US Open, we shall see. But I say it's a strong dollar on the back of the non-farm payroll data. Gold going to drop, bro. Amir, well, gold is down. You're right. Again, I don't know what time frames you guys are trading it, but you see the reaction to gold here in the 5-minute. Big spike to the spread obviously widened. We went to 1701, so within a dollar of the key 1700 area was the initial reaction. So a very strong reaction to the dollar. Some were trying to take it up, but here this is a 5-minute chart for gold and unwinding quite nicely there on a 5-minute, 15-minute, big old candle down to that 1701 level. Let's put that in the object list. No, let me make it an indicator list, isn't it? Object list. 1701 NFP reaction. There we go, 17.1 for gold. So that was our move down. So gold, yeah, to the downside. Good afternoon, my friend. Bagas, sell gold, bro. Well, yeah, everybody's saying sell gold. There we are. It's unwinding. 710 was the key support area. You see this a bit more clearly here, can't you? So 1710 sort of through here. 1710 there, through there. Sort of a bit of support for most of the day. Tested before the data came out. It's only 50 and then big move down here as the data has broken today. So gold under pressure from a stronger dollar. Kanash saying gold up. Well, at the moment, my friend, it's unwinding going the other way. By all means, I trade what you see. If your system's saying buy it, buy it. But here, for me, that's technically looks weak. Sell KE. How long will how low will gold drop? Who knows? Don't try and guess it. It's moved quite aggressively. I haven't got ATR on here, but at the moment it's it's bounced. Seems to be bouncing here off 1701, the initial spike, but we know we're at the low end of that 17.2, so it's still looking like it's moving down. Welcome, saying pound a yen. What time frame, my friend? Anybody want to add time frames? Nobody's saying gold. Everybody's saying gold. Welcome. Yen, dollar, yen. Where's my dollar yen chart gone? Where's dollar yen gone? Dollar yen, here we are. as we might have expected, spike over the big resistance at 145 rounded number, 145, big fat round number. Let me zoom this in to the out to the daily time and say this is there's 144.50. This chart's not. That's 144.50. I'll just tidy this up. Sorry, just bear with me a second. 144.50. Okay, so I don't know. No. Yeah, 145 is the big one, isn't it? 145. It's been a big resistance for a while, close. And if I zoom this in, you'll see what a significant level this is. So this is 145 up here. Big resistance for all of August, and it's a big psychological resistance. The Bank of Japan announced, or the government of Japan announced, it spent 54 billion of their reserves trying to defend the yen during September. So this big rally we'd had in the dollar from all of the year, but significantly from over the summer during August and September. The Bank of Japan trying to defend the weak yen, but it's not working. And we're currently, if we go back to the hourly chart, big leap up through this 145. And we're currently trading at 145.20, so it's a big resistance there. If we close above 145 significantly today, that'll be more weakness for the yen going forward. But that inevitably brings in the 150 level, so it's a long way from here. But inevitably on an end of day basis for the bears, for the bulls, it brings in 145, which isn't that far away. It'd be a new 3-decade high, but you can see it's not that far away on here now, and it's big. But you can see here that interestingly here, is how the MACD is diverging quite significantly there. So we really need to break that. That's going to go up. If not, this could recover quite aggressively also. See that big significant divergence, so we can't get over 145. But more interestingly for you, I would guess, welcome, is where we're going today. Well, it's been positive today. Again, we've moved down. The bottom of the Bollinger Band provides support ahead of the data, and bang, there's the 50-hour, there's the 200-hour, 50-hour across the 200-hour today. That's positive from the wheel up this week, and we're over the 20. So we've got the 20-hour, the 50-hour, including the bottom of the Bollinger Band, and the 200-hour. So that's positive. We're over 145. Where we go from here? Well, it's a bit of overstretch, you would argue. Now, stochastics looks like it's moving up into an overbought situation. RSI is 67, but still rising. So there's still some legs in that. Welcome to the upside. Chai says buy dollar. Well, certainly dollar has had a good old run. Let me just move that up there because it should be up there. The CAD, the yen, I should say, and dollar index should be there as well, but it's not. So euro. So there we go. New low here for the euro, 97.36 as we talk. So dollar certainly on the bid. Let's have a look. Sarat, what's 1400? Gold? I don't know. What are you talking about? Let me know. Kanash says buy gold. Well, it's going down, my friend, today. Buy, sir. I don't know what you're talking about, lads and girls. Please explain. Gold log drop. Yeah, it is a logarithmic drop. It certainly looks like it's moving. Theo, really? All right. Are you guys starting to wonder? I guess you are. Next request for an asset is cable from Alpha. Cable remains pressured. I say the UK government haven't helped themselves. And here, well, there we go. That's the cable's reaction. A weak currency reacted to a strong non-farm payrolls. That's 5, 10, 15, 20, 25 minutes since the data came out. And we're into our fifth candle down. That's a weak breakout. Sorry, it's a strong breakout on that 5-minute chart. 15-minute chart, even more dramatic, isn't it? So let's go back to the 1 hour time frame. So big move down, back under one. The low from yesterday has been breached. The 111.30 area, the 111.14 area was the intraday or the inter-hour low, which we punched yesterday and again today, and we've broken under that. And as I was saying earlier, obviously this candle has still got 10 minutes to complete, but it's punctured the 200-hour moving average, the 50 hours there, and the 20 hours there. So they're out of sync, but here that's looking pretty weak for sterling. We got up to the daily time frame. You can see what a strong rally we've had last week from this move all the way down to 103 following the disastrous mini budget from Mr. Kwarteng. 37-year low, an all-time low for sterling against the dollar last week. We recovered very significantly. We stalled at 115, didn't want to get to 115 in fact, and we've given up the ghost last 2 days, and we're moving down again today. And we trade at 111. So again, historical lows for dollar against, the sterling against the dollar. It's also weak against the Japanese yen as well. And well, most of the crosses, the euro pound is also weak. Dropping, Sadiq, you're absolutely right. Quite a move. It's a really good, from dollar bulls and from those who want the rate hikes to continue. Or expecting rate hikes to continue. It was a good non-farm payroll. Just quick recoup again. Those of you that might be joining us late. Headline came in at 263,000 compared to expectations of 250,000. Last month's wasn't revised up or down. It remained at 315,000. Earnings slipped a tad, or 0.21% to from 5.2%. On an annualized basis to 5%. The participation rate also slipped a tad, but again, that's positive, better than expected, but just a tick down from last month at 62.4%. Unemployment, the important unemployment came down 2 ticks at 3.5%, and the wider U6 measure of unemployment, which is something I always look at, has come down significantly. It's come down 0.3% from 7% last month to 6.7%. So more noise, more tight jobs market, more jobs being created. Therefore, the acceleration in the interest rate hike cycle that the Fed have started doesn't seem to be cooling the jobs or the pay of people in jobs and the participation of those in the market. So it's just going to push the Fed to remain on this hawkish path, regardless of what analysts may be saying. But it may mean when they do pivot, it might have to be quite aggressive. But again, markets might have got ahead of themselves on the pivot. I mean, they both could be wrong. It's possible, but at the moment, the Fed seem and the biggest hawks, the biggest doves on the Fed have turned very, very hawkish. People like Kashkari and Evans as well. So strong jobs showing the resilience of the US economy, but potentially getting pushed into a recession situation. Remember, we've had 2 consecutive negative quarters of growth for GDP, which is a measure of recession, and the unemployment rate isn't going up, it's going down. So the Fed are going to remain on this path of the brutal, very blunt interest rate policy to try and curb this inflation surge. So all eyes now on Tuesday when the US, I think it's Tuesday the 13th, is it 13th? US CPI data next week. Snow Billy is asking about the Swissy. Let's have a look. Swissy. I don't know what Swissy here. I've got Swissy here. I should have Swissy here. I haven't got Swissy here. That's not Swissy, but let's pull in Swiss. Swiss franc. Swiss franc at 99.50. Again, a positive chart for the dollar here on the 1 hour time frame. 4 hour also positive. Interesting. We're right at a key resistance there for this pair through the end of last month and the beginning of October. So key resistance at 99.50, and we're currently trading at 99.45. So that's 4 hour bang, bang, bang. We're down, but we're back up. So looking to break higher from flat Bollinger Bands. We're right at the edge though, so it may be coming down. That's very much an oscillating sort of move. Swiss down, up, down here on the 4 hour. The stochastics here crossing in the overbought area, so we may be looking at big resistance here. So shorter time frame, you might be looking to take a short position on that Snow Billy. 1 hour, obviously we have this big leg up courtesy of non-farm payroll. So that remains bullish from its breaking out of its range. Oh, that chart probably that's a horrible colour, isn't it? Let's change it a bit. It's all right, leave it as it is. Okay. So Swissy up 99.40 at the moment, and again all day today we've been over that 99.10. That was our resistance today, 99.10. We broke through that as the data broke. So we'd like to break this 99, or certainly 99.50, 99.40 if we're going to move up on the 1 hour basis. There we go, 30 minutes. You might expect big breakout there. The key one really is that 4 hour chart where we've ran into this resistance up here at 99.55. So there might be some short positions taking place. Go back to the daily for the Swissy. It remains, bid from the middle of September, doesn't it? It's still so the shakeout we had. That's still very much in place. So looking to break out. So it's wanting to get over that 99.50 level and to take it up. That's our daily support line, which we tested Wednesday, Thursday, and the close of September as well from the mid-September rally. But daily still bid. Certainly the signal line here on the MACD is still rising. Your stochastics is still rising here. And RSI 61 and still rising. So that remains bullish on a daily basis. So what you'd be looking for is 44 to break up here. It's a positive. Swissy Snow Hill, my friend. Again, I don't know what time frame you're trading on. Gold, sell gold now. Well, gold. Let's come back to gold. It's shadow. Let's go back to the beginning. It remains down. There we go. There's that test. So we've broken that 1701. Gold is under 1700, my friends. It's getting sold off, and we've had another leg lower since we looked at this literally 5 minutes ago, 15 minutes ago. So today's new low is 1690 as far as NFP is concerned. So I'll have to get rid of that indicator list. So we've gone lower again, didn't we? See what we put in there? So I'm going to delete that one. And we just got that one in now, haven't we? At 1690. 1690. I'll come up to that 16. No, I'll come up to that 1688 in a minute. NFP low. What is it? 7th of the 10th so far. So we're moving lower again. So gold has moved another leg lower. We've broke out the 1610 level. We've breached the key 1700 at 1701, a low we'd had in the first half an hour of the reactions in non-farm payroll. Now we spiked lower to 1690. Now then, 1688 and 1680 are two big support levels on an end of day basis. You probably can't see that very well here on this chart here, but there's that 1688 dotted line, which takes us back to these lows here in July, and there's the big thicker. Can you see the 1680 line? I hope you can see that. If I zoom that up, it's the daily time frame, guys. So 1688, 1680, two big end of day support lines for gold, and currently today we're currently been testing way below 1700, and they're into that 200-hour moving average there. That's the 200-hour moving average. The red line here at 1690. So we've breached 1700, and we're back to 16, or been back to 1690. We're now back trying to crawl back to the key 1700 level for gold. So some buyers down here. Knash 1722. Are you long for gold back to 1722? It's buy down. Dave saying gold, bear trap. Maybe, Craig. I get it. It's you're all about your time frames, my friend. Obviously the volatility of non-farm payroll, can sometimes can't catch that out. But at the moment, that was a strong, from my analysis point of view, that was a dollar positive reaction. Where we finished the day, where we finished the day. But really, it's dollars reacted positively. Some buyers now at this 97.50 level for euro. Sterling also find some buys at this 11.30 level. Aussie, for the sake of it, also around about find some buyers. But at the low levels, isn't it? We've had to go down to 63.85 and 63.70, I would guess, the bottom of the Aussie tail. Yeah, sitting below that 63.69. Yeah, so 63.70 was the low for the Aussie. So yeah, we'll have to find some buyers against the dollar now, but the bias is very much to the downside. Dollar bulls, they continue. The hawks on the Fed. That's very much going to push for that 75 basis point hike. Remember, the Fed funds. I haven't got the Fed funds here on this particular workstation. But yesterday, last time I looked, or this morning, I should say, it was an 85% chance of a 75 basis point hike on the 2nd of November. Alexander's asking about the S&P 500, so world's most important stock market. And here we are, futures. So look, they are expecting to be weak. There we are. This is a 1 hour time frame for S&P 500, Alexander. Into the key 200-hour moving average and below it during the NFP. Let's have a look. Let's go down how it went. So 15-minute. Yeah, it was below. Yeah, below. Whoops. Yeah, below. So the peak was within the last 15 minutes after 4 o'clock. So big leg down into the 200-hour at 3,780. So 3.7 is now coming in to play again. Let's put that on there. It should be on there anyway, shouldn't it? 3,700. Big target we had for the short for the summer. And there we go. 3.7 tested again. Remember last week here on the daily time frame, Alex, I'm sure you do, we went below 3,600 on Friday and on Monday as well. But a huge rally Monday, Tuesday. Cooled so far this week. So again, daily pivot high put in here on Wednesday. 20 period moving average still sloping down across the 50 period here. The middle of so if you weren't already short, big down candle here on the middle of September, breaking below 3,900, which is a big support level, and then the second half of September doing what it does. It's normally very, very weak, and it was particularly weak this September. So lots and lots of pips bagged for short players on the stock markets for September. Woeful September, woeful second half of August after we'd rallied here 17% into the 200-day. Classic little move. Took 20 days to come up, took 10 days to get rid of it. Retrace, and then big candle down here on the 26th or the 13th when the inflation was higher than expected. Big candles matter, guys, and we've been down ever since. I'll see what the inflation looks like this month on the 13th of October. Has it topped out? Have we seen peak inflation? That was all the chatter. Doesn't seem to be the case, but we'll see. At the moment, the trend remains to the downside. Huge move at the beginning of the quarter, beginning of the month, but it's very much still a bear market for stocks, and we're down for a third consecutive day. And here, before the market opens in 25 minutes, we're down this for yesterday and again today. So that's our support, 3,780, and then the technical psychological 3,780, but that's still to the downside. Alexander, I don't know what time frame you're trading it. Khalid, when could we look for a position? Khalid, what are you talking about? For what particular asset? It's really up to you, my friend. Abdul, hello. He's in. Whatever you're in, Rash Wonder, enjoy. These are all. Why haven't I got any Facebook comments? Let me see. Oh, I haven't got Facebook on here, have I? No, I haven't got Facebook on here, so I can't see. Everybody looks like you're coming from YouTube, but anyway, let's have a look. Bouncing coming. Does this mean growth for Euro USD? I don't know what you mean by that growth. I'm a technical trader, technical analyst, and it's down, my friend. It's broken that 200-hour here on the 1-hour time frame here for Euro USD. This particular strategy, if you were trading this, would have been, it was short. It was long Tuesday, went short Wednesday. Bit of a long-ish rally, but ran into the 50-hour there quite nicely, and then went short again here yesterday. So, trade what you see, not what you think, as they say. So 12 o'clock yesterday, it's been short, and it's been short ever since. It's all sort of perhaps stopped you out here ahead of non-farm payroll, but certainly whether you would have got in this hour here before the data came out, if you were not trading, I would have not done that, having bagged lots of pips this week. I would have just, thanks very much and left. But if you're coming in now, you're looking to trade the US session. That's a short. That's a big down candle, breaking under the 200-hour and moving lower and breaking that 97.50 level, and we're back down again at 97.42. So Euro looks to the downside, my friend. I hope all enjoy with my analysis. Amir, very interesting, Amir. Is this Amir Khan from the West Indies, or is it a different Amir Khan? Because I've got lots of Amir Khan friends. Mahatma, I don't think it is Mahatma. Where are you from, my friend? Anyway, Yuan Fadi Jali is saying dollar, euro, USD, euro. Euro USD, you mean? Does this mean growth for Euro USD? Your other question was, do you mean the other way around? Are you trading it the other way around? I don't understand what you mean, my friend. Anyway, we're half an hour, 40 minutes after the big data. Anybody I've missed? I don't think so. Amir was saying sell dollar, sell gold. You won the gold. This is Amir. Certainly, the dollar has not sold. I don't know how you're trading that. Dollar remains very much bid. Dollar index here up. It's the 1-hour chart. Big strong candle. NFP over the 200-hour, over the fractal high from today and yesterday. So here we are, 112.50 being tested again. So dollar index continues to move to the upside. A stronger dollar. Everything else is weaker against the beast. That is the dollar. Dollar-CAD, we had quite good data out of Canadian dollar as well, but it's here 3 hours up so far for dollar-CAD. Quite a choppy move there, interestingly. Dollar-CAD. Okay, let's have a look at oil. Oil continues to sort of give up some of its profit from this week, unsurprisingly. Huge move, big into our move before non-farm payroll. It took us to test the $90 a barrel zone. Lots of the banks upgraded their expectations for end of year oil prices. Goldman Sachs, Citibank, I was looking at yesterday, on the back of the, not surprised, but the aggressive 2 million barrels a day production cut from Saudi Arabia. It really upset the US administration. Biden's promising some sort of diplomatic response to Saudi Arabia and some economic response potentially as well. But the Americans are very much in a bit of a crosshairs about how they deal with this production cut and what they do, whether they use their own oil or look to allies, as the administration has said, to help supplement the US winter heating oil. Remember, there's lots of capacity problems in refineries in the United States. Lots of them closed down, lots of them didn't get maintained very well over the pandemic era. Pressure all over the place in the oil industry. So $90 being tested for US oil, 89.20 we trade. Currently, let's have a look. Khalid's saying, hang on a minute, are these new comments? Hope you enjoy my analysis. That was Amir and Khalid. When did you put that on, Khalid? 1804. We looked at Khalid. I don't think we have actually, have we? Dollar-CAD. So I just had that on a minute ago. So Dollar-CAD, it's been a bit of an interesting one. The CAD's come back a bit against here because we moved up. So again, it remains range bound. So 137.90 is where we spiked originally, following the original NFP. So the Canadian data was okay. The US data outstripped it, but we've come back down now. So again, we've been most of the day, or certainly since lunchtime here, under the 20 hour. So it's really sideways action. I can't really say much about that, to be honest, my friend. If you're going to trade this today, that's your support there at 137.06, 137 is the big round number for Dollar-CAD. And if we need to break higher on an end of hour basis, it's there at 137.45. So obviously it's tested 137.50. So that's your range, 37 to 50, so 50 pip range for Euro. Big support. We've got the 50 crossing the 200 hour here. That's positive on an hourly basis. So we could see some more pressure to the upside. So support there, bottom of the Bollinger Band. Big 200 hour and the 50 hour moving average crossing there, Khalid, for Dollar-CAD. And that seems to be it. Nobody else has got anything, so I'll just hang on and see if anybody else has got anything else to say. We're 15 minutes away from the cash open. Nobody asks about Bitcoin or about stocks. There's lots and lots and lots of things to trade, my friends. So it's not just oil. It's not just gold and forex. There's lots and lots of assets that are moved on data like this. But certainly, it's been a dollar positive non-farm payroll. So I'll just wrap up. I was referring to. Oh, right. Sorry. I was referring to positions on Dollar-CAD. What Khalid? Sorry, Khalid, these all come in a bit of a mix-up. So your last comment was Khalid. Oh, when could we look? Oh, right, okay, you mean this. When could we look for a position on Dollar-CAD? Okay, I've got your question run together now. Well, look, this is what if you're a Dollar-CAD trader, we're in a channel. We've rallied up yesterday. We tried to get this 137.50 zones. That's a little bit high, but you can see what I'm sure you can see what I'm saying. So they're our fractal high. So that's a resistance, 137.50. Well, it's 53, but call it 50 for the round number's sake. And that's our floor. So at the moment, you could be buying down here and selling up here, but we're waiting for a breakout of the two. Big support is here, 136.76. Here, where we are here at 137 itself, the big round number. And the resistance above this level is the midline of the Bollinger Band, which sits at 137.35, and then this top here at 137.50, basically. So they're the levels you want to be looking at, and you can either take the short-term frame. So if that's our 1 hour channel, if we go down to like the 5-minute chart, these are our channels. You can see, you might be thinking to buy there and sell up here. And perhaps buy down here now because it's got down to this level. If it holds here, I'm not if you're going to trade this on a 5-minute, but it's really sort of bouncing about. But here on the 5-minute still, we've had this rally up and now it's moving down. So if this breaks, we could move down significantly. But at the moment, it hadn't head of NFP. So that's the range you want to be looking at. But here on the 1 hour time frame, there's the range like clearly demonstrated. Okay, Khalil, I hope that's answered your question on an intraday basis. Let's just have a look at stocks, see if we've had any bounce back, because we've got a bit of a bounce back against the dollar. Nasdaq, not really, has it? We've broken that 200 hour and we're currently trading at 11,350. So that's certainly a down day for tech stocks. Still signal down. That's the Nasdaq, S&P 500, similar sort of setup, although it's above its 200 hour there. So relatively, the S&P 500 is performing a wee tad better than the Nasdaq. Nasdaq, under its 200 hour there. And the Dow here, that's 4 hours. So let's go back to the 1 hour. Again, it's a bit like the S&P. So the S&P, also the Nasdaq is underperforming the other two, but there's the big support for all three indices on its 200-hour line there. 29,635 for the Dow. The S&P 500, it sits at 3,708, and the Nasdaq, we're under it at 11,380. So that becomes a resistance today. So Nasdaq underperforming the two major bounces. Enough will start bouncing. I don't know. So possible. Saying so possible buy or sell based on confirmation. Well, again, it depends how you're trading it, my friend. But it's still at the bottom end of that range. I'd say the 5 minute sort of held. So that's perhaps short term. We haven't tested it on an end of 5 minute basis, but it's at the bottom end of that channel. But yeah, it's not what I'd be looking to trade, simply because there's lack of direction, lack of trend, basically. But if you're trading it, obviously the bias is to the upside, because if we look at the 4 hour time frame, it's been very choppy this week, but we're still very much in that channel. The daily is choppy. We came down earlier in the week, but we're back up now. Still in the top half of the Bollinger Band, so it's still been very, very positive here for September and into the end. But we did get to 138, so that's not that far away still, is it? So if we break the 137.50 area, so still biased to the upside on a daily basis. 4 hour a bit messier. It's difficult to tell. Again, that's channeled. And the 1 hour, as we've just seen, very much channeled today, as you might expect, ahead of jobs from both parties. Remember, Macklin yesterday, said the head of the Bank of Canada said he's looking to move rates as well. He was very hawkish. So, who can out-hawk each other? Well, at the moment, the dollar's sort of outbidding the Canadian dollar at the moment. So here we are, right into that support channel. So we're down here at the moment. Okay, so take care, everyone. Khalil, it's not a problem. That's what I'm here for, my friend. Any final comments, anybody, before we go? Or before I go, I've got our quarter review to issue before I go home for the weekend. No? 5, 4, 3, 2, 1. Any more, my friends? Anyway, so take care, everyone. Stay safe. May the pips be with you, as they say. It's been a good, for dollar bulls, it's been a good non-farm payroll. Just finished with final comments. So headline beat, 263,000. Unemployment's better than expected, 3.5%. Earnings slipped a wee bit, so that's positive as well. And labour force participation rate was 62.3%, also a little bit down, but also that adds to the ferment that jobs market is tight. The aggressive rate hikes haven't yet bitten with regard to the slowing of the US economy, or the slowing of the jobs market. So inflation is still enemy number one. And the Fed are very much set for more hikes into year end. And so we haven't seen the end of the rate hike cycle, even though lots and lots of people are talking about the pivot. So take care. Have a great weekend, everyone. And may the pips be with you. All the very best. Bye-bye.